live stream. Welcome to the afternoon session. We had a good morning session, but it's good to have everyone back. Good to be back for the afternoon. It's now 1 o'clock. We're just past 1 o'clock. I checked earlier. There's no news this afternoon. We did have a red folder at 8:15 this morning, but nothing for this afternoon. So we're clear without any major volatility this afternoon. Just jump in and check on price and see where we are. Okay, it looks like we do have a downwards trend starting. Let's see, it's continuing from this morning. We had a downwards trend. There was a pullback. I mentioned during lunchtime that there potentially could be further pullbacks towards some of this liquidity at 15,950 and 15,973. Looks like we didn't get that during lunch. We returned back to lows, the same lows from this morning, just before lunch. So now the price is kind of in a holding pattern. We can look for shorts because it's not really a consolidation zone. But let's be aware that we're returning back to an old level that the last time it was here, it had bullish momentum. So let's just be aware of that just in case we see higher prices delivered. Okay, based on the strategy and what we're looking at, what we would typically do is, since its momentum is moving bearish, we continue to see lower prices. What we look for is for a high to be taken. So any high, let's just pick this one, for instance. If we're moving lower, we saw this low being put in. After this low was placed, we look for a high to be taken, which happened here. And then we look for a continuation lower for the lower prices, which we had. We had a breakdown. Once that breakdown occurred, we then want to Fibonacci our manipulation leg. Since we're looking for lower prices, any move higher is considered manipulation. So we look for a manipulation retracement into 30%, and we take a short from there. So let me just hold down our tools, which I had earlier before lunch. And here's the short tool. I like having these tools around because the parameters are already set for the scalp, which is a 5-point stop loss and a 5.25 point take profit, which covers, if we do win the trade, that extra quarter point will cover any type of fees that come from the broker. There usually is commissioning fee of $1.30, I believe, to enter a trade, and you have to pay the same to exit the trade. So for every trade, it's just over $2.50. So that extra quarter point will cover any of the commissioning fees levied on by the broker. We can see that so far we have not had a retracement into 30%, so the short would not have been activated. But let me just put this in place. Okay, so it would be here. And if we were willing to take this trade, then whenever it passed 15,880 from the green over to the pink area, that would target our trade. Outside of the pink area, we would lose the trade. If it trades down outside of the green area, our trade would also close, but we would take profit. This yellow area, if you're concerned about what this yellow sort of box is here, this yellow area, this is the new day opening gap. So what this is the variance between when price closes at 1700, the markets close for 1 hour for maintenance and anything else that happens in the background. And then the markets reopen at 1800, starting the Asia session. That variance between the closing price at 1700 and the opening price at 1800 is denoted by this yellow box. So we can see whenever price returns back to the opening value of the day. So as you can see, price from 1800 yesterday all the way until lunchtime today, it made a move and returned right back to its opening value. Okay, it looks like lower prices of salt. We have now broken this low. Okay, now that low's been broken, let's clean up our charts a bit. I like to keep the charts as clean as possible so we can see price action. Okay. Okay, so our next step, we're looking for a high to be taken. In fact, Let's take that back. We already had a high taken. So this high that was made was taken right afterwards, and then it traded downwards. So let's move this out of the way. As you can see, so it tricked and then sought lower prices, which took out this low. So we would do the exact same thing from high to low. There's the manipulation. And we're looking for a return into 30% for a similar trade. Looks like I deleted my tool, so I will bring it back. Set my parameters again. Oops, wrong one. Looking for the short. Okay, 5 points, 5.25. So now in the event that price wants to return to 30%, it will trigger a trade. What I'm going to do is adjust my trade to now enter at 50% retracement. Okay, let's just be aware that we just now had another trip of a high. So now if price seeks lower, price takes out this low, then we'll be looking for a setup in this range. Let's shift down to the 15-second and see if there's anything there to note. Okay, it doesn't look like it. Let's go back over to 30. Okay, let's just shift this down just to see what the 30% retracement trade would have looked like. Anyone looking for 30% retracement would be in the trade now. I opted for 50%, so I'm now in a trade. Okay. Don't like really the way price action is going. I'm going to shift my stop loss down. Okay, that ends our trade. Things weren't looking good. We were able to preserve some capital. I'll be right back. Back. Okay, let's move this out of the way. Go ahead and remove some of these lines. Okay, now let's get ready to look for longs. One that didn't produce anything earlier because it never traded back into it. This is the one we were waiting for. Was that too late to get in? There we go. I was going to come down and just put it above the swing high, but no need. All right, let's now shift this out. And now that price has come all the way back up to trade into this price entry that we were looking for, which would have delivered at both the 30% and the 50% retracement levels. Now that that's happened, let's now wait for price to settle and look and see if it will seek lower prices and it was just a retracement to fill in the liquidity there, or if now we're going to seek higher prices. And this was just to deliver that trade, deliver some balanced price, and then trade higher. But we'll give it another 5 to 10 minutes or so and just See how price prints. Chris, welcome back. Good to have you back. Carrying over from the morning live stream. Okay. Price does want to continue to move upwards, so let's look for our low to be swept. We have one. Essentially, we had a low swept here after this high was made. Took out that low. Now, potentially, it's going to make a new high. Okay. Let's remove these. We just took a short, so I don't really want to jump in on the opposite direction, but I do want to watch this entry and see how it develops. Okay, that would have been tapping into the trade several times. Okay, re-entry. Adam, welcome. All right. Good thing I didn't step into that trade. That would have been a loss. Yeah, if I'm going to take longs, I want to see a little bit more price development. I, even though this set up a long by having numerous highs made, for me, it was more trying to get back up to this range to short. So I wanted to see price continue to push, maybe sweep a low, take a high, make another high, and continue to show that it wants to run with the bulls. And then I would have been happy to take a long. Okay. Sweep up a low. Now let's see if we'll continue to make new highs. Okay, let me take these executions off. Oops. There we go. Good to have you, Adam. I spent a couple years in the Middle East back in 2008 to 2010. I was living in a city called Aqaba in Jordan, down at the Red Sea, right next to Israel, Saudi Arabia. So it was a good time for me. I really enjoyed my time. I enjoyed the people I met, the culture, the food. I didn't have a chance to travel to Kuwait, but I did visit Egypt, Dubai. Where else did I go? I went to Bahrain. I think that may have been it for the Middle East. Adam, if you'll type into the chat a little bit about your trading journey, how long you've been doing it, or what style do you prefer? Okay, since we've taken out several lows, I'll remove that line. We still know where our high is, what we're looking for. And once we break out of this high, then we'll start looking for a long setup. And that long setup, just as a reminder, if this becomes the ultimate low, then it'll be this entire leg down as manipulation to fool traders thinking we're going lower, only to take prices higher. Okay, I also trade ICT concepts. I discovered him. I started it trading in the beginning of 2021, but it was through IML and a lot of retail concepts, and I didn't really get a good foundation, a good start on how to actually trade. And so spent most of 2021 just trying to figure out what trading was all about and find my footing. And then I discovered ICT for his 2022 mentorship, and I followed that into 2023. So I still trade those concepts, but for this session, yes, I am scalping on the 32nd. So we're just looking for a one-to-one trade, 5 point stop loss, 5 point take profit, and we're looking to trade with the trend. So that's the model that I'm using for this live session. Okay, we're going to wait for a little while. Looks like we're getting this type of pattern again, where we just see expanding prices hitting the top and the lower end of the range. Well, 15-minute liquidity market structure shifts. How many entries are you seeing per day on a 15-minute time frame? I would imagine that's probably on each session you may get 1 to 2 entries. And are you doing this as like part of his silver bullet strategy, like at 10 o'clock in the morning and then at 2 p.m.? Okay. Yeah, that's about what I thought. Yeah, the 15-minute actually can be a little cleaner just because you get fewer entries and you have more time to wait for the setup and see it unfolding. Just have to be really patient. For me, as a beginning trader, patience was not my friend. I was juggling a lot of things and, super excited about trading. And so waiting all day for a trade just didn't work for me. I ended up, taking false moves a lot and just getting in too early, only to once I decided to stop trading for the day, watch the move unfold exactly the way I thought it would. Okay, so let's drop this out. So maybe it's not developing the way I thought it was. Now it's more or less trend line liquidity. So you have it selling, and you'll have anyone who got in here for the sell and they watch it start to break down, they'll start trailing their stop loss as it makes a new high. And the market will let them do it for several iterations. And it'll come down here to find a level of support, and then it'll take them out one by one. Let's move this out of the way. All right. Okay, so now what we're going to want to do is to wait for price to get out of this area here. Just clean it up a bit. Okay, price is in between this price leg from this high to this low. It was climbing, but it couldn't eclipse this high. Started breaking down again. Didn't eclipse this low. Now it's starting to go up again. So you just have internal range liquidity. We don't want to trade in that. We want to sit back and let price settle down and show a clear direction. But yeah, Adam, you're right. When I discovered ICT, that changed the game for me because I'm a why person. So I always want to know why. Why are things happening? Why is this? Um, because previously I had started learning trading where there was essentially indicators just telling you, oh, when you see this, take the trade. But there was never any reason why this was a viable trade, why I should trust it, and also where should I exit. Should I only look for 20 points profit and then exit the trade? Should I wait for 40 points and exit? Should I be happy with 10? Like, none of that was ever explained to me. And so I just kept searching for answers and searching for different mentors. And I discovered ICT, and that was exactly what I was looking for. It was like being in school again. Okay, yeah, the S&P is it is a little cleaner. You're right. Nasdaq will give you a few more fake outs than the S&P. Um, S&P is a little slower for me. I like it to move a little quicker. I like a little bit more volatility. Um, but I completely understand, and I do trade the S&P as well. That's my backup. So I'm mostly Nasdaq, but I will trade the S&P, and that's pretty much all I do. Hey, finally. Okay, so now we're definitely looking for shorts. Let's mark up our latest swing high. I'd rather see the next setup happen in this area or lower. So I'm not really interested in this high being taken. I'd like to see a high set here and then have that one eclipsed for a move lower. Let's hope this position provides some resistance. Okay. Take a look at the 15-second. All right, this one's a bit cleaner. You can see there was a high taken. Now we like to see price breakdown. Here's that short from earlier that was created over here, traded below on this candle. Now it's trading back into the zone. I don't want to take a trade in this zone, so I'm not going to enter this one. But it looks like it just, let's see, 15,868 even. And let's look at this candle, a high, 867 3/4. The next one, 869. So, yep. So the next one definitely crossed in. It's a live trade. Let's see what happens. Well, I'm sorry, I'm not in a trade, but the trade is active for anyone who wanted it. Okay, there it is. There's delivery. If you had more than 2 or 3 contracts, it may not have closed them all. I know a quick touch will close 2 or 3 contracts, but if let's say you went in with 10 contracts, you probably still have some open. So it would have to revisit down and trade through it to close out 10 contracts. I know I've tried it before. When it just goes down the touch, I think the most that normally you'll get is 3 or 4 contracts. And it really depends on how long it sits there. If it just goes a touch, but it sits in the same position for a few seconds, it'll likely close all of your entries. But if it just zaps in and zaps back out, it won't close them all. But it looks like that's not going to be an issue. Let's see. There it is. So no matter how many contracts you had, that would have closed them all. That wouldn't have been a problem. But there's another example of scalping strategy. Let's put it on the side and let's continue watching. Okay. We've already had lows taken, so we don't have to worry about that any longer. Now we just look for more highs. It's trading back. And if it does make a new high, we're back in the same area where I'm not looking forward to a trade. So again, I'm not going to take it, but I will draw it up for anyone who's new to the channel, anyone who's just joined, or just curious about whether it would work out. I've done back testing, so that's why I don't like congested areas like that in consolidation. But for those who haven't, I'll continue to mark them up just so you can see how they fare. All right. Here we go again. Right, and each trade is worth $100 per contract. So it's up to you how much you're willing to risk. I generally go in when I'm confident in the way price is moving. I generally go in with between 4 and 5 contracts. But when I'm not confident, I'll just risk one contract just to see how things work. And if it does work out, at least I go up $100. But I don't want to risk losing $400 or $500 when I'm not confident in price action. Okay. It's fast moving candle. I don't typically like those. Let's see if it taps us in at 30%. Okay, that would be the tap in at 30%. And that would have been a winning trade. 5.25 points. That would have taken from the entry until exit about 1 minute. 30-second candles. I'm sorry, this is we're on the 15-second. I'm sorry, I thought I was still on the 30, so that would have been about a 30-second trade. Let's now go back to the 30-second and see if that trade also presented itself on this time frame. Took out a low, swept a high, so it did exactly the same. It would have entered on this candle, and the exit would have been the following candle. Okay. Let's move this over. Okay. So now we hit a new high. We go back to the same formula. Look for a low to be swept. The next one we have in play is here. Is the entry on the order block. And let's see, let's go back to the previous entry we had. It's not necessarily always on the order block, but I guess you could say that this downwards movement creates the order block that sends price higher. And so on the retracement back down, normally on a lot of times with ICT or something, you would set your order block here, and you want to enter on as soon as it touches into the order block, and you potentially would have, you know, maybe this, oops, sorry, set up as your order block. Right, and you can see it came down, went past 50%, and then traded out of it. So potentially, I guess it's just an alternative to the order block theory. It gives you a Fibonacci placement to enter in on, as opposed to either entering at the top of the order block or, you know, the consequent encroachment level or something like that. So but it is very similar, especially since we only want to take trades in trending markets. These pullbacks essentially are order blocks on higher time frames. So that was a good observation. I've thought about that myself, whether I could just be an order block trader and it'd be the exact same thing. And it looks close, actually. Okay, we're still looking for a low to be swept. We haven't had one yet. This is actually, let's move this up to this one. This is our next candidate. Let's look at the 15-second. Maybe we did have a low taken. And we did right here. That low was swept by this candle. So then to move up, clearing out these equal highs, essentially created this. You can go from here to here and look for a trade at 30%, which is here. You know what, since it's on the 15-second and not the 30, let's just go in with one contract. Let's see what happens. Shift up to break even. See if we can get a push up to close the trade. And profit, almost. Keep going. There we go. All right, I wasn't extremely confident there since I dropped down in a time frame, so I didn't take a full trade, but as you can see, one contract. There it is. Let's go back over to the 30 seconds. So we just took a win on the 15-second, whereas on the 30-second, we wouldn't have had an entry because there wasn't a low taken. Okay. Price continues to put in new highs, so we continue our process, which is mark up the lows and wait for one to be taken. Oh, okay. Ultimately, this is the high we were hoping to get taken after lunch. Let's put that back until it's taken. Okay, so you would have used this as your order block. So the return down would have tapped into it, not quite 50%, but the top quarter, the order block, and then traded out of it. Okay. Yep, I get it. That completely makes sense. Yeah, you can use the last one. You can use the entire range. You can see it tapped into 50% and then out. Um, so I think technically the order block is the entire range, but using the order block for an entry, um, people do tend to consolidate it a bit. But no, that's a great observation, and everyone's going to have their own little model to trade with. Start with someone else's model and just tweak it to fit your personality and the way you see the candles printing. Okay. All right. So price did pass this high from 115, so we can get rid of this line. Let's get ready to mark up our low, assuming this is not going to be taken on this candle. We got 7 seconds left. Okay. So this will be our trigger to look for step 3. Okay. Step 2 is complete. Now we're looking for a new high to be put in. I just want to mention that it's now 2 o'clock. So now we're into the 2 o'clock hour. Any ICT traders, be on the lookout for the silver bullet. As I look down at the 5-minute on the bottom left-hand corner, we have a fair value gap above, a pretty sizable one that was created during lunch. And then we have a fair value gap that we're actually in the process now of seeing if it will create or not, or if we'll retrace into it. Okay, so it looks like that's not going to be one, but there is another one down at 873. So 15,873 is a bullish fair value gap, and we have a bearish one at 15,892. So for now, we're sitting in between those two, and let's see how price wants to print in between. Okay, let's see if we get a push up to a new high. I could ask a favor if you could go ahead and like the video. That'll help YouTube find others looking for live trading feeds. And that'll help us grow the community and get more people in here watching us trade. Also will help with our development, just having more traders in the room with different ideas and being able to, to just assist. I'm by no means a professional trader or an expert trader or anything like that. But I do know how to trade, and I would like to develop a community where we're all trading and sharing ideas. Thank you for that. A short term, we need to be on the watch out for potentially a short. So I'm gonna go ahead and just mark this up the way I see it. Although it looks like a risky move right now. Okay, so that would have tapped this into a trade. Yes, Adam, I do stream every day. I'm doing a New York morning session beginning at 10 o'clock. And I stream from 10 until 12 noon. I take an hour off and I come back at 1300 and we'll go until 15 or 1600. I haven't decided yet. I'm leaning towards 1600, but it just depends on how things are going. That would have been a winning trade as well. Wow. I don't want to go against my principles and start taking those trades, but I could see how it was forming, how it was developing. Um, let me just quickly mention what I saw, just so you have an idea. So I'm just following market structure as price is building up. I'm taking stock on the lows, so it makes a new high. This low becomes uh, the most vital low and the one that would change market structure. Once this high was eclipsed, this low became a key low. We didn't see it trade back down. A new high was made, which would then make this low, which then we saw a break here, signaling potentially bearish movement. I saw it buy up. It didn't go into the fair value gap, but then I saw it trade down, and I was wondering if this would be the high that it would need to take out. So it makes a low, makes a high, eclipses that high here. So let me just move this out of the way and mark this one up. This became a high that was then eclipsed right here. And then we saw this low eclipsed over here. So then you can set up a short. And so that was what I saw, even though I wasn't 100% confident that that would materialize, which is why I didn't take the trade. But there you go. And then here's a return to the same 30% zone. Again, I never take trades for a second time after it's delivered the first time. But let's say you wanted to take the second time, you wanted to take a trade out of the 50% zone as opposed to the 30. Then that person, you'd be still in the trade. With a profitable delivery, taking it at 50. You tried to take a second time, it entered at 30, would have still made it in the trade and would have just gotten out without losing. So that trade delivered twice. Let's move this over. And we continue. Yes, 30%. Sorry, this says 70, but it's actually 30. I draw my Fibonacci's backwards sometimes. But the typical entry is 30%. 30% gives you the maximum amount of entries. During my back testing, they were still coming in at 70, 75% win rate, even at entering at 30%. 50% increases your strike rate, but it decreases the amount of trades you get per hour or per session. So you just have to weigh that trade-off, whether you want to have fewer entries or whether you're happy with the strike rate of having more entries. And so I go back and forth. Sometimes it's 50%, sometimes it's 30. It just depends on how I'm feeling, what price is done before, that kind of thing. Adam, don't worry. Once this live stream finishes, I'll send out the invite for tomorrow's live stream for tomorrow's AM session. I'll also send out an invite for tomorrow's PM session as well. Stretch over this fair value gap, just so it's visible to us and we can see if that becomes resistance to price. Excuse me. Okay. So you say the structure and lows that I use. Okay. I believe you're speaking about when I was talking about marching up this way. Okay. So what happens is when price makes a new high, I go back to the low that created that high, and that becomes my key low. That if that low is broken, then I'm looking for, and then I consider that a market structure shift, at least on the short term, and I'm looking the opposite direction. Right? Price moved down. It didn't take out this low, but then it moved up and it took out this high. So now we have a new high. My new floor becomes this. And I continue to watch price as it moves. Made a low, didn't take out this low, so we're still bullish, but now it made a new high. We shift up. And so I'm just following this as I go up. And then once the low is broken, the key low is broken, then I'm thinking that this could be a market structure shift, but the way that we're scalping this is we're looking for fake market structure shift. So I want this low to be taken, but then I want the high to be regained. And so I'm still waiting. I'm not looking for shorts just because the low is taken. I want the high to be regained. But if this low is taken and then it moves down, it takes the next low, it makes a high and then shifts and takes another low. Now I'm starting to look the other direction. But as price is moving up, I'm just mentally making a note that, okay, this is a low that I'm concerned about. This is a low I'm concerned about. This is a low I'm concerned about. And I just continue moving in that direction. Let me know if that was what you was hoping to get from it. Right. And another thing, Adam, at the very top. So once this high was made, I'm sorry, this high was made here. Then we had a shift down, right? We had a shift down, and then a new high was made. And when that new high was made, you look down and you're saying, okay, where's the swing low? That becomes my key low. And the next swing low is actually down here for this time frame. So in that case, that new high was made and I don't see a swing low here. So I drop down time frame to 15 seconds. And in that case, when the new high was made, there was actually a new swing low made. So this would become the key level for a market structure shift. Going back to the 30-second, that's why I mentioned that this was when I saw the market structure shift, and that put the short in play, but I didn't really want to, I didn't trust it and I didn't want to make the play, but I wanted to set it up just to see what it looked like. And so that's why maybe it wasn't that clear that this doesn't appear to be a swing low on this time frame. You drop down a time frame and then you see the swing low that was made for that new high that was made. So I get the confusion. Sorry about that. But I hope that clears it up. Yeah. If you need any more information on market structure, there's a person on YouTube that I follow. He has two videos. So it's only two videos you're gonna have to watch. They're pretty long though, so they may be 45 minutes to an hour, but there's only two. And his name is Stoic TA, I believe. I believe that's the name of the YouTube trader. He made very comprehensive videos that are very informative. And for me, I watched them just a few months ago after doing this for 2.5 years. So it was a great refresher on market structure. Because once you start learning a lot of advanced concepts, some of the earlier ones, some of the first ones that you learn are not as clear because you haven't refreshed your memory on those. And so watching his videos really helped. And drop this link in here. There you go. There's the link to his YouTube page. Ready? Okay. All right, no problem. Glad I could help. Clean up our charts a bit. Okay, so we had a high swept here. Now we just want to get our short tool ready. Looks like potentially there's a short coming. There was a low made down here. It's several, yeah, high swept there, high swept here. And now we're just looking for a sweep of the lows. So that would be our entry. Well, I'm sorry, that would be our trigger to get ready for an entry. %, is here. Okay. Okay, let's see if maybe we get something like, oops. Yeah, maybe something like this. That happens, you'll end up with a sweep of this high, sweep of this high, and a sweep of this one. Probably ending with this one. So there'll be a lot of liquidity for the markets to go and grab prior to seeking lower prices. Hey, all of those highs have now been swept, the ones I just marked up. Let's now see if price wants to reject out of this fair value gap from 2 o'clock, or if it wants to pierce through it and continue its move upwards to the fair value gap I spoke about earlier on the 5-minute. That's at 15,892. I mean, it's only another 10 points or so. Okay. Price makes prints lower candles. Let's see if this fair value gap will hold. Maybe we get a bounce between these two levels for a few candles. We get a candle to touch the fair value gap, we'll have this low swept in this process, and then we can see higher prices and look for a long setup. Okay, well, they have a low from here broken. That's on the 15-second. Let's go back to the 30-second. Okay, let's see if on the 15-second we had a sweep of a low. Yeah, we did actually. Here. Okay. Let's go back to the 30-second. It's set up in marker by chart just in case a long is required. Move our positioning tool into place. I like how the candle bodies are staying right at or above the 50% of this fair value gap. Okay. Alrighty, now we have a new high placed. So our trade can be activated. Let's go in. We moved our stop to break even and we got stopped out. So we didn't lose the trade, but we didn't win either. So preservation of capital, not exactly a win, but it's definitely not a loss. See what happens with this trade, but yeah, I'll tell you why I moved my stop after the trade's over. Not quite there yet. Break even again. All right. Won't try this again. But while it's still in the middle of the trade, let me go ahead and just explain why I wasn't very confident in it and why I moved my stop twice on both trades. Now, there is a fair value gap here. So this does give you a little bit of comfort that price is going to have a floor that's going to support it as it moves higher. But what we have is we have a lot of price in this range, and it's just not really moving out of it. And so because of that, as price is fluctuating up and down, I could see it easily moving down into this area without any issue. And because of it, that took my trade down to a 50-50 or even less. And so because of it, once it made a big move up into this range, then I was willing to move my stop loss up to then see what would happen afterwards. And you can see now it looks like it's going to deliver. But I don't care. FOMO is something I dealt with a long time ago, and I, for the most part, have overcome that. So I'm not worried about missing a trade. There's always going to be another one. Right? Even here, you saw that we needed a new high to be made. It made a new high, and then it didn't even close above the high. It traded back down into the range and closed. Right? If you're still in a trade here, once it traded above this swing high, then you can move your stop loss above below this swing low and feel comfortable. I moved mine to break even. But if you just wanted to minimize a potential loss, then you would have moved it basically to the midpoint of this fair value gap. It's one of the longer trades though. On this time frame, usually the trade will last 2, 3, 4 candles. And we're approaching 12, 13, 14 candles now. I like this open above the trade entry. There it is. So anyone in this trade or anyone who took that trade was a winner. Only took 8 minutes for that to happen. So took quite a while, much longer than most trades. But yeah, I don't really prefer these consolidation zones. And then when price isn't moving quickly and doesn't show a willingness to go in the direction that I want, then I'm not willing to stick around and wait. You can see This is what happened. It just fair value gap to fair value gap. Just played in between. Now, when entry is on the 50% level, that's probably a better entry, right? There you go. So we have an entrance here, exit on this candle. So this would have been the winning trade if someone was looking for 50% as the entry. Okay, it's now 250. So the 250 to 310 macro is now running. We'll likely seek liquidity from both sides before determining what it's going to do for the 3 o'clock hour. Not really. On the 30-second time frame, fair value gaps, no, they're not extremely trustworthy. The time frame is just too short. Um, and the price for the higher time frames it's going to want to move around a little more. So those fair value gaps are just going to be taken out. I just put them there just so I can see it and know that a fair value gap exists. And so if there is movement, I've accounted for it. But you're right. It's not something that you want to use for a confluence on taking trades. Wow, look at that range for the last hour. It didn't really give us a lot to work with. But hey, that's trading. That's the way it works. The market does what it does, and you just react. This from 1 o'clock until now. 15,888, 15,851. It's a 40-point price range for 2 hours. $15. So I can see an example of your strategy on the 15 minutes. 15 minute. Okay. So you say you trade 15-minute liquidity. Okay. So does that mean you're short, aiming for this level and then this level? Or does that mean you went in here on the 15-minute, you found a fair value gap and you're shorting every time it returns inside? Create a high at 115 and sweep it at 145. Okay, yep, create a high here, sweep it here at 145, and then you would have been selling out down. Okay. Okay, yeah, that would have given you a nice 20, 25 point trade. Okay, and you say the 1 minute, 2 o'clock for entry. And 4, so this is, so essentially ICT's silver bullet. At 2 o'clock, you look for a fair value gap that it's either in or that is nearby for it to trade into and out of. So you would have taken entry here. So that's about 85, pushing downwards. Guess you could have used this as a target, which it hasn't reached yet, but okay. Yeah, so essentially what you would have gotten in this one trade for 25 points, 25 handles, I would have had to find 5 scalps for that. All right, let's look and see what 2 o'clock would have done if you were on the 30-second. All right, so in this case, as I mentioned, matter of fact, this is the exact same trade we were talking about at 2 o'clock. Remember on the 15-second? This was the low that created the high, the highest high that it made at 2 o'clock. So this was the low that needed to be broken for a short. In that case, this move down, this would have been your trigger. You would have then had a fair value gap here if you wanted to use it. To play back into the fair value gap and down. That would have been your trade. So you would have entered somewhere in this range in 80 to 81. You would have put your stop loss here at 88. And then you would have sold off for whatever risk reward you were looking for. It's awesome. I mean, there's no one way to trade. And thanks for sharing. I'm glad that you brought us in on that. Right? If price wasn't in the same zone that it's always been in, short would be nice here. Okay, it's now 3 o'clock. Give me 2 minutes just to run out for just a second. But I'm going to stay on for another hour. I'll be right back. Alrighty. Alrighty, I'm back. Okay, so price never did trade back into the 30% retracement to open up this short. However, it did make a lower low. So now we look for a high to be taken. Let's see here. Okay, we've had a high swept. Let's now see if lower lows is on the table. Let me make that a little larger. Okay, there we go. All right, let's actually cancel that order. Only because I don't want to enter another trade in this zone right here. It's right here. It made a low, but it's all the same area. Okay, that would have brought us into the trade if we still had it open. And we'd be almost at the end, be near completion. That would have been a winning trade. Move down to the 15-second and look and see if there's been a high taken. Okay, this is the closest high to us that we're looking to see broken. Let's also be aware that potentially we'll see this high broken, and before it breaks down to give us another short entry, it'll tag in this short entry at 15,854 and 3/4. So let's just keep that in mind as price moves upwards. Better? Okay, I'm just taking a peek at the higher time frames, the daily, the 4-hour. We're just now tagging into a fair value gap on all the higher time frames, the weekly, the daily, and the 4-hour. Let's see the 1-hour as well. Yeah, the 1-hour is actually in the middle of the fair value gap. So from the 1-hour up, there's bullish fair value gaps where we are right now. Not that we won't continue to see bearish momentum, but we just want to be aware of where we are just in case we see price go the other direction. We won't be surprised. down. As it continues to print lower prices, we're still at a standstill until we get a high taken. What I'm going to do is let me drop down to the 15-second and see if potentially we miss one. Yeah, we did. Okay. So on this way up, it was printing highs that were, okay, so that's the only one that was taken. This one here, I believe, was equaled. Yep. But we do have a high that was taken on the 15-second chart. New high was made. Oops. Do this the right way. New low, I mean. Trade back into 30%. Now it looks like it's on its way down. Let's take the short tool, move it into position. Okay. Now let's set up our short two just in case it retraces back in and gives us an opportunity. It did not, but it did deliver for anyone who took that trade. Yeah. Shift back over to the 30-second. See if we can get price to go above these highs. And if it does break that high, then we can look for another short. Okay, the 15 second just created another short-term high. It's now swept that high. Let me just mark that up here. Let's check on the 30 second. Okay. Now, 30 seconds still hasn't crossed the high. The high on the 30 second is still up here, the swing high. Okay, now that new lows have been put in, let's go back and check the 15 second. Okay, it traded back in, activated the trades. I was a bit late, so I didn't get in yet. Let's see if it gives me an opportunity now, and it did. Again, this is on the 15 second, not on the 30. Let's go back to the 30 second. Okay, a losing trade there. Just want to see what the trade would have looked like at 50%. Yeah, it's drawing out. Okay, so even a 50% entry was also a losing trade. So let's shift this over. Okay, this is our next target, is to sweep this low or a push upwards. Keeping in mind that we had a long setup that was never tapped into here. So it may push through, and instead of just immediately turning around and putting higher prices in, it may continue to retrace and give an entry for a previous setup. All right, Adam. See you next time. Thanks for joining. Okay, so we now have that sweep of the low. It almost made a new high, but it didn't. Made an aggressive move down, sweeping the lows. And let's see if it'll continue that move. Ooh, okay. So it did. Yeah. See if it will deliver for us or if Break even trade there. Um, yeah. I didn't like that aggressive move I saw. I didn't want to hold it. Although that potentially could be a winner where it'll play around in here for a little bit and then spike up and deliver. That is something you have to be careful of when you're trading between 3 and 4 o'clock. Towards the end of the day, you'll have these aggressive, just first second of a candle just moving 10 points on you. And there's no way to know that that's going to happen. Or also, and there's no, normally you would think that that would happen at like a red folder news event or like an opening bell type situation. Um, but between 3:15 and 4 o'clock, these things can just randomly happen to you, which is why you always want to have a stop loss on your trade, because I've been in a trade before without a stop loss when that happened, and it's not a good feeling. Trust me. Yeah, let's continue to monitor this trade since it's still in session. Let's see what happens. All right, it's 3:40, 20 minutes left until most trading's done. I know closing bells at right around 5 o'clock. Most prop firms force you to exit your trades by, top step is 4:10, but I think some others might be like 4:15. But either way, we're getting close to the end of the day. And I just want to stay on until 4 o'clock. Answer any questions you may have. Don't think I'll look for any setups. Um, but again, yeah, if you have any questions, let's go through those. Even having it here, it looks like the trade is going to deliver a profit. But yeah, price action didn't look good to me. I had to get out. But that's the human in me. I have to. I can't let a trade that I can see potentially being a loser just watch it go down the drain just because I'm on live stream. There it is. It delivered. Wow. So I walked away with a break even instead of 500 bucks. But it's okay. This one candle could have very easily been a negative 500. So you win some, you lose some. Lead here. Get rid of that line there. But I did mention earlier that we were hitting a fair value gap on all the higher time frames, the weekly, the daily, the 4 hour down to the 1 hour. And so seeking higher prices or seeing some quick bullish reaction was something I was prepared for. Ready, there we go. There's a big push. 5 minute, we have a fair value gap. Let's pay attention to that. Let's move this out of the way. Back to 30 second. Didn't realize I was on a 15 second for so long. Okay, just in case we get price pushing up even further, we're going to mark out our lows again. Okay. All right, that'll end our day of trading. Um, just Didn't like how things were moving. I really didn't like this huge candle down to put us in the trade. Right, you have one candle that's 8 or 9 points. We only have a 5 point stop loss. That let me know price was a bit volatile at this moment. But it looks like it's probably going to deliver, just like our last trade that I exited early. But again, no FOMO here. There's always another setup. Yeah, I closed the last trade with just under half of the profit target. See, there's the delivery right there. Scalping model works. I'm not saying it doesn't scare you sometimes though, but it works. All right, let's shift to the 15-second. Let's see if we had a low taken. It looks like we have not had a low taken, so we continue to wait. Ooh, okay, every low was taken. Look at that candle. Holy cow. First second. That's exactly what I was just talking about just a few minutes ago. How quickly one candle in 1 second can move. That was a 20-point 1 second candle. 350. This is why I don't like being in trades late in the day. Oh man. Let's take a look at the 1 second chart. Let's see that big move down. Here it goes. In 2 seconds, going from 834 and 3/4 down to 814 and 3/4. Like I said, 20 points. First second, this candle. The second, this candle. Unbelievable. Let's just watch the 1 second print for a bit. I've never sat on this time frame and looked at price action. Hardly keep up. Slow it down just a bit so we can see what's happening. 5 seconds. Yeah, we had a fair value gap. Okay. Okay. So we turn this into an inverted. Traded through but didn't close. Traded out of. Traded to 50%. Out of. Traded through. We got this low. There it is. Wow. Yeah, that's too much for me. I can hardly keep up. Even a 15 is pretty quick. I'll settle in on 30. The 30s just feel more natural to me. So you want to see a high swept before making lower lows. Got a high here. Okay, we still haven't had a high taken. That one wasn't. And we have a new one created here that hasn't been taken either. Steady putting in new lows. So we just want to wait back and wait for price to come back above this fair value gap and eclipse one of these highs. Or it can make a short-term high here and then take it out. Okay, it's 3:58. We're getting near to the end. Do we have any last questions or comments or anything you want to throw in the chat? Make sure to like the video so the video can get pushed out to more people looking for live streams on Nasdaq futures or just live streams in general. YouTube uses likes and subscriptions and all of that to push it out to new customers or to new people who may be looking for the same. So just let them know that you like the content by liking the video. Okay, we're starting to get a push upwards. Maybe we'll eclipse one of these highs and have one final setup before the day's over. Okay, push through the fair value gap. Let's see if it can do that. Okay, let's look at the 15 cent. Oh, okay, there it is. So we did push through this high. Oh, push through this one as well. So both highs have been eclipsed. Now for a short setup, we would need price to then sweep this low, essentially making a new low. And then we take a short at a 30% retracement of whatever this leg up turns out to be. See if now this fair value gap turns into support, whereas before it was resistance. Okay. Fair value gap would essentially be here. We can get a new low and I'm sorry, not the fair value gap. Fibonacci is on this. This is the manipulation leg. So if we can get a new low created after surpassing this low, what we want to see is price return to 30% and then sell for five points. Right. So basically sell back down to the opening of this candle. It wouldn't even need to make a new low. What we like about it is it's also that 30% retracement is sitting in the middle of a fair value gap. And very near to the center. So it gives you some confluence that when price returns in this gap, we could expect for it to push downwards and deliver a profitable trade. Okay, for anyone who's just joined, any questions? Do you want to see a setup? Do you have any questions about the scalping model? Any questions about how often I stream, where I'm from, anything? Yep, make sure you like the video. Make sure you subscribe to my channel. Therefore, YouTube will push out my video to other traders looking for live sessions. It'll also send you reminders of when I'm going to be on a live session. Okay, let's see if price can give us one quick push before the session ends. Now we're looking for price to push down to this purple line. So we will need to start moving, but it's not too far. It's only 10 or 12 points. It should be able to do that. Okay, we're waiting for that last push down past the purple line and then a retracement back to 30% for short. Go ahead and get our tool set up so we're ready. So far, this fair value gap is providing support. It hasn't been able to break through. Hasn't even gotten all the way to the 50% level yet. Okay, my Top Step account shuts down at 10 after the hour. So there's only 5 minutes left to enter and exit a trade. So I will not take another trade. However, I'll continue to monitor it, continue to watch it. As the candles print, I'll call it out and point out if a trade sets up. And then we can just watch it with this trading tool. We've made a new high. Which effectively ends our short setup that we were looking for. Unless price crashes down and races to it right now, I don't see how we're going to look for a short. Although, when you're looking for a short, you do want to see a new price made, and you want to see a high taken. So we had a high made here, swept, and let's see if we get price to just crash down. I mean, we already had this high taken. Okay, we're starting to see price crash now. This is what we were hoping to see. Now we need it to push through the fair value gap. Looking up our charts, now that we know that we've had the high swept, we're looking for price to get all the way down to sweep the low and put in a new low at 15,802. Based on the time, that's probably not going to happen. But for a short, that is what we would need. Now, if we were looking for longs, let's assume this was at the high. Then we would need a short to be, we would need a low to be swept, which did occur already. That happened here, swept through. Then we would need a new high, which occurred here. And then we would need a retracement into this level, which would have created a long right here, which we would still be in the middle of right now, still in that trade if we had taken a long at 30%. Okay. Guess we could watch price action until it determines whether this long would have been a winner or not, and I'll cut the stream there. But for now, let's just take a peek and see if price delivers. Chris, no, I don't trade every day for the entire market, but I do in the afternoon. I'll trade from 1 until generally 4 o'clock. I try to do until 4. But in the mornings, I don't trade the entire session. I don't start until 10, which is after the opening bell. And I know some people start trading at 8 o'clock for New York. So I don't start until 10. And yes, full time, absolutely. Yeah, no, take your time. Like I said, I'm 3 years in, and I've only really been confident in my trading for the last year. So take your time, learn as much as you can. Also, figure out the psychology piece, because after you learn all the technicals and you learn how to trade and you know what you see, you have your model written out and you can execute it with your eyes closed. You still need to tackle psychology. You need to be in a trade, see the trade go against you, and be able to remain calm. You need to lose a trade and be able to still be confident in your model to deliver when you need it. Um, and that's a very difficult piece to conquer. One thing that helped me on the psychology piece is the book Trading in the Zone. You can find it on YouTube or as an audiobook. There's several sites on there where people are reading the book to you. So I did that. It took probably 6 or 7 hours to go through it once. And I try to revisit that book every 2 months or so just to listen to the concept once again and get it hammered home, that trading really is a 60 to 70% success rate. But through risk management, that's where the profit comes from, right? You're never going to get good enough to where you're a 90% trader. Like, or it's possible, but the likelihood that you get that good is very, very, very small. So you need to learn to make your profits on a 70% win rate. You need to be able to lose the 30% and understand that that is only the 30% losing trades that would occur from that um, from that strategy. But it's not that you did anything wrong, and it's not that the markets have changed their algorithm and is doing something differently. It's just part of the game. It's the 30% that would have lost anyway. Um, so for me, that was probably the biggest piece, the psychology piece. Mm, yeah, Chris, I had something similar. I was up like 6,500 or something on one of my accounts, and through revenge trading and lack of discipline, it just started dwindling and dwindling. And then you take larger trades and you revenge trade even more. You take a sketchy setup just because you saw part of your setup displaying itself, and before you know it, you're all you wanted to do is end. You don't care about the last trade. You just want it to end so you know that it's over and you can start over, right? And that's when you know you're mentally fatigued. And so make some rules for yourself. How many losing trades can you take in a day before you quit and turn your computer off? How much in value can you lose before you turn your computer off and walk away and come back the next day? If you have two losing days in a row, do you take a day off? Like, set all those rules up and don't waver from them. Stick to them, because that'll help you build up the mental endurance you need to be a full-time trader. And I think the hardest thing for me is because you spend so much time looking at videos or studying or looking at presentations and trying to technically be as good as you can be, because that's typically how we learn. That's how we were taught growing up. Um, but one of the biggest things for me, that, and a lot of traders say this, is back testing and journaling. So make sure that the trades you take at the end of the day, you're going back and you're saying, okay, these won. Did I do everything right? Or did I do everything that I was supposed to do? Why did this trade win? And if it lost, is there a reason why? Is there something I missed? Go back through the other time frames. Was something you could have seen. Um, and that'll help out quite a bit just on you being confident in yourself, as well as learning some of the nuances that you may have missed or may not have been taught from some of the mentors. And another thing that I typically learn through back testing is I learn how I want to trade, because every time you're watching someone else trade, you're trying to pick up what they're doing. And you're saying, oh, this is what I'm supposed to do. But the more you look at it from your own perspective and see what makes sense to you, the more you'll start tweaking some of the models that you've seen to fit your style. Okay, unless there are more questions, I will get ready to close the live stream and get set up for tomorrow morning. Going once, going twice. All right, so thanks for joining. Thanks for joining, and we'll do this again tomorrow. Look forward to it.